people are we go. Everyone is on the floor, even though we do not know. Now's the right time to do so. If you wanna make it go, you just gotta let it flow. Everybody sing with me, everybody love me. If you don't know really how, I will show you just right now. Everybody sing it, and everybody feel it. Feel it, feel it, feel it, feel it, yeah. Feel it, feel it, feel it, feel it, yeah. Feel it, feel it, feel it, feel it, yeah. Feel it, feel it, feel it. Love's the only way we got to follow me, but maybe everything will sure not mellow. Hey, there's nothing but a bit of sensation, which is nothing to die with a love foundation. So stand up, people get up, stand up, people for the agenda, no matter where you're at. Come on, people, away go. Everyone is on the floor, even though we do not know. Now's the right time to do so. If you wanna make it go, you just gotta let it flow. Everybody sing with me, everybody love me. If you don't know really how, I will show you just right now. Everybody sing it, and everybody feel it. Feel it, feel it, feel it, feel it.
Hi and good morning, friends. Welcome to the United Traders Day Trading TV. It's Wednesday, the 19th of June. Yeah, it's Bernanke Day. I'm expecting a great show later on during the New York session because the Woolworld is waiting for Mr. Bernanke's statement. So, yeah, let's see if there will be some trading at all before this big event, roughly 12 hours from now, so a long way to go, but let's see. Yeah, thanks for joining in. And yeah, my very first hand experience this morning was it makes sense to switch on the microphone before starting the show. So sorry that I was silent at the very beginning, but I hope everything is fine now. Okay, so let's bring up everything we need. So here we are, some music should start. So here we are, yeah, today we have some element in the show that we have not had for a longer time now, the mailbag. I received 2 interesting questions, and I want to go into that a little later on. Depends on how many time the market will leave for answering these questions then. Okay. Yeah, the market itself. Not sure if there is any market at the moment. So let's go and let's have a look together on the charts. It's an hourly chart that I've pulled up now, and you can see it already here. We are moving inside of 20 pips or less than 20 pips, but let's change to a 15-minute. Maybe there are some hidden details. Oh yeah, indeed. Here we are. A lot of details. Can you see that? Really strong hidden information in this chart. You can't see it? Okay. Me too. There's nothing in this morning. We are having a range of 15 pips from late night New York to to the recent time. Hey, good morning Mark, good morning Ray, good morning, bonjour. Great to see you guys. So yeah, I do not know about your trading yesterday. I hope everything went well for you. I was trying something yesterday afternoon. Yeah, let me show it. It was so it's as usual, the trades are on a 1 minute chart. Yeah, here we are, and maybe you recognize it. There was a move. There was a strong move up going to the 134 level. So I was thinking, if we are so close to this round number, there should be a stop hunt, but you can see price was going down and down. So I scaled in slowly but steadily. Then yeah, and yeah. I guess you know already, it's very small positions, micro lots, so every single level was another scout size, so I've split it up as usual, all the rescue levels down the scout size troops. Yeah, thanks to that I was able to catch the low, and I could make some pips back, but then unfortunately here I had to leave. Just 6-7 minutes shy before the move was going up strongly. So yeah, the chance was there, the management was okay so far, but my time window was closing out. At that time I was having an ice cream, if I remember right. Okay, so let's hope that we have some more luck today. But something I can say about this issue, the bad thing is, if such a situation is not putting some bad thoughts on you, so you should not be angry about this. It's trading, so maybe today we are in this similar situation, and this time we are able to make the money that we have not been able to make yesterday. But I do not know about you. Have someone of you been trading this move down and up? It was a relatively clear shape. Yeah, also on the 15-minute here, I'm talking about this down move. It was the news, and as we have said in the London session yesterday, this US news it should provide some volatility, because people try to derive some hints on what Mr. Bernanke may do tonight. And so yeah, we have had some volatility. We have been going down 50 straight pips, and then we have been going up 50 straight pips, and yeah, then finally we got the stop hunt that I was waiting for, but I was not trading at that time anymore. So yeah, okay, today, yeah, Mark, you're right, not a very exciting day so far, and there's a good chance that it will not change. Let's have a look at the calendar together. Oops, wrong. Hello. Here. So it's my local time here, so to go back to GMT time you have to subtract 2 hours. So 30 minutes after this session has closed, we will have the MPC minutes, usually a news delivering some volatility to cable or all the pound related pairs. Then we have once again an interesting German number, the economic expectations. Also yesterday we have seen some volatility around this number, but then more or less you can forget about all these events. The main and the ruling event for the day will be the Bernanke show later on. Yeah, I will be here in my trading room trying to do something with this information, hoping to be able to scalp some pips out of this volatility, but not sure if it is possible. If the moves are too fast, and there is no arbitrage opportunity for me, so I cannot do anything with that. And the expectation of the market is not in a very clear way. There could be some hints about when QE tapering may start, but there are also a lot of people saying they are not awaiting any hints on that, but they are awaiting some statements that QE tapering does not necessarily mean that we are going to tighten the QE measures too strong. So in fact, what Mr. Bernanke is going to tell the markets during the past few months is everything is depending on the numbers, especially the job market and the inflation numbers, and there could be some increase but also some decrease in tapering depending on the market and the numbers. But okay, that's it so far, so let's see. Yeah, for now, because the 50-minute chart is on, we are awaiting the pre-London action. Hopefully there will be something. The same like yesterday, you can see it here. We have been waiting patiently for confirmation of the reversal. Not sure if you have been able to trade that up move then, but maybe this time it's going to the upside. Let me go back to what we have been discussing yesterday. If the market is expecting some hints about a QE start soon, the market should go down then immediately, and with having that in mind, the big boys, the big foods, may try to bring up the market a little more. The most difficult barrier, the 134, was broken already yesterday, so the limit orders up to the high from yesterday around 134.15, 16 are eaten up already, so this room should be already clear, so maybe they can gather some momentum to go up a little more and to draw on London or a New York high. And this time then Mr. Bernanke is in the late night, in the New York afternoon session, so yeah, let's see. Yeah, based on that, my guess is that we will have a lot of time to talk about the mailbag questions that I have with me. Well, let's see. Yeah, I'm looking around, checking the charts to get any hints. Of course, I've done my little news scan this morning. The Asian markets are almost mixed, but what they have all in common is that they have not been moving very strong. The whole world is waiting for Mr. Bernanke. And there was an interesting interview with Mr. Obama yesterday on Bloomberg, so it seems to be very clear that Mr. Bernanke is going to leave, and yeah, he will leave in January, I think. Then his contract is running out of time, and now the market is starting to ponder, to bet, to discuss who will be the next Fed chief. Yeah, the interesting part is the Fed chief is nominated by the US president. So, and remember, Mr. Bernanke was nominated already more than 8 years back, I think. So he was nominated by the last US president, not by Mr. Obama. So maybe it's very likely that he's going to choose someone from his own party or someone standing very close to Mr. Obama's party. So, but let's see. Yeah, let me zoom in. I want to show you something because I want to show you something. Can you see this number here? The average true range of the last 5-minute candles. It is below 3 pips. And we have been having a slow market yesterday, but it was around 5 to 6 pips. Now it's around 2.4 pips. So yeah, that's a strong sign, and you can see it. My scaling of the chart is always the same every day, so you can see it easily also on the charts that there is nothing going on. The DAX was opening a little in profit with a little gap up or an up move, but not a strong one. 10 points based on an 8,000 figure is not a strong move, so yep, there's nothing in there. So maybe it will become the most boring session we have had ever. Yeah, so let's go with our daily routine. We have checked the news beside Mr. Bernanke, beside some cable news and some European news, but not the big events. Mr. Bernanke is ruling the day. Overnight we have not seen too much action. Also the market seems to be waiting, so yeah, I want to go into the next step of preparation of the trading day. Yes, we are facing the round number. We are approaching the round number again. I see it, but I do not know about you, but I actually do not know what to do with it. We can go up or we can go down. Based on my more or less global thinking about the outcome tonight, there's some 51% probability that the market may go up some more, at least retesting yesterday's high, maybe drawing a new weekly high, but I'm not pretty sure about that. Yeah, let's observe this action. And so far on the 50-minute chart you can see everything, but for sure not a stop hunt low. So usually the big foods, before bringing the market up, they are implementing a stop hunt low. So maybe this time they are going for a stop hunt high ahead of London opening to bring the market down. Who knows? That's why I want to wait a little, and that's what I want to do just right now. Yeah, I want to spend this 2 minutes on our little meditation. The 2 minutes that makes the difference. So yeah, whatever you have done yesterday, try to think about something that went very well for you and focus on that. You remember, for me, yesterday, it was patience that has served me very well during the last 2 trading days. So yeah, let's go into that meditation. I will be silent for 2 minutes or so. So I hope you're done with this little exercise as well. Yeah, this morning it was difficult for me to find something very special, so I was taking yesterday's trading day and that what I was showing you on the chart, that I was defending my position, and when I finally was ready to make some money I had to leave and to close out the position. So, but it has not made me angry in any way, and yeah, that was something I think it's okay. It's the right way here. The mindset, the trader's mindset should be: do not get angry about chances, opportunities you may have missed because of the external circumstances you're in, because of your trading environment. Yeah, that's part of life, and we are not sitting inside a bank, so we have to cope with all the external distractions that may show up. So yeah, that is what I want to try to do again today. So here we are. Yeah, what's the market doing while we have been more or less offline? Not too much. We are still above this round number. Yeah, jumping in, I do not know. I do not know. Yeah, what I usually do when I do not know what to do is trying to be patient. I do not want to force for anything. Of course, it could go up another 50 or 60 pips or whatever. It could go up to the sky, but I do not know. And what I know is how these big fools are playing the markets. And if you have no idea what to do, then in the first hand, during the past few years, every one of us has been trained to read the charts and to try to follow what we see on the charts. Roughly from last year September on, I try to train myself based on the information of the big foods, the market makers, the big boys, what they are doing there. I try to see the picture behind the facade, what they want to make us believe. And so that is the reason why I'm pretty aware of that it could turn down. So what to do? We have 4.5 minutes for this 15-minute candle. Minute candle here. So yeah, I will take the time. Maybe there's already an insight. If this candle is crashed down strongly, then maybe my bias for the next 30 minutes or so, yeah, it's short then. But let's see. If we are going up some more, I'm not in. I do not know about you, but for me it's not worth trying to chase this move. And maybe there is a good chance that I will not have a single trade till Mr. Bernanke is on or was on finally. So think about your performance, think about the risk. Of course, we know we are very well trained to defend our positions. Yeah, that's true. So it's nothing wrong with taking a position, but for me it's yeah, to expose me to the market. I'm for some reasons I'm not very keen to do it at the moment. So 3 minutes left for this 15-minute candle, so let's see. Of course, we should have a look at the hourly chart as well to see if there is a pattern showing up or something that the candle painters may want to draw for us. That's the hourly chart. Yeah, it's a strong candle, but let's say we are reversing close to the round number, so it's not a very strong candle anymore. The last 2 minutes. The average do range is increasing a little, so we are close to 5 pips now, but still slow, but getting more to the state of normal. Thanks, bonjour. Yeah. But this show is also not too impulsive and energetic if the market is so slow. But yeah, 30 seconds left, so after that I will bring up the little mailbag so that I can show you the topics that we want to talk about, the questions I received by email. But let's wait the last 15 seconds. If there is anything, if there is any force in the market, any way to get an idea about the big foods and their game plan for today. Because of course there's some risk for these guys as well. If there's happening something very surprising, and let's say they're really building up their positions and expecting at least a 50, 60, 70, 80 pip down volatility. I'm not talking about a down move, because a down move, yeah, there is a down move includes somehow that the direction, the trend maybe for the rest of today and tomorrow, the rest of the week should be down. Then I do not expect that we get a too clear statement from Mr. Bernanke. So I think there will be some volatility so that these guys can keep their book back into a balanced state, and then they may have something new for us for the last 2 days of the week then. But yeah, the candle has closed, not a strong move. So yeah, let me pull up the mailbag thingy. So just a second. Having a look at the chart again, so let's wait a few more minutes before going into the mailbag. You know, the last 30 minutes for the hourly candle are running, and let's bring it up again. If this candle is going to stay the way it is at the moment, it is more or less giving an indication that there could be a retest of yesterday's high and maybe drawing a new weekly high then. And on the way up we have a lot of possible resistance areas, almost every 25 to 30 pips. we are in a region that we have visited lately. No, not lately. That we have visited last time at the beginning of February. So it's a while ago. There should be a lot of limit orders to final stop loss orders for all the guys that have been playing the downtrend since February. But let's see. Yeah, it seems we are going up some more. Let's have an idea. So if you're long, well, it's cool. Ride it, but be nimble. Very close to the high. Yeah, let me go into the 15-minute charge together with you. You know what I always try to do is to get an idea how it may look like, or what I have seen many times on the chart. So somehow I'm 51% sure. So if you can talk about sureness at all at this level, but there should be a down move, and that they are going to trap some volume here at the top side. So if they want to do it that way, so a perfect candle for me would look like this: trapping guys, reversing the candle, and oops, wrong key, going down again here. Do not know how far, but so at the moment I'm comparing a typical reversal scenario, how it could look like, how we have seen it many times, and I tried to get hints from the 1 minute if they are going to draw that. I do not know if they are going to draw that. So the hourly candle that we are waiting for will not look that strong anymore. So let's see. Yeah, you feel it, but we are human beings, we are not robots. So if I'm not convinced about anything, it's difficult for me to pull a trade. And do not know about you. If you feel the same way sometimes, do not force for anything. Wait, or take a day off from trading. It's also not a bad idea. Yeah, it's all about you. How you feel, how you react, how strong you are. The only guy that is responsible for your future, the guy is you. Yeah, okay. Every time when I'm thinking to bring up the mailbag thingy, the market starts to move a little, so I should threaten the market with bringing up my mailbag. So, market, listen, please. If you do not move, I will pull up my mailbag. So it's a good time to move now. No. Okay. Maybe the market knows that it was a cheap bluff only. So here we are. My mailbag thingy. Mailbag, mailbox. I should be more clear about the terms I'm using. Yeah, there have been some questions in my email during the past few days, and the first one it's from James. From your experience, what is or was the most difficult issue that you had to master? Yeah, James, really cool question. You see, I'm not able to answer this question immediately, and the most difficult not sure how to and which focus I should choose. The most difficult thingy to master, of course, is not the market. The most difficult thingy is not the trading technique. That is something you can really learn. It may take 1, 2, 3, 4 months. Then you have the understanding of everything you know about the market structure, who owns the market, about typical moves, about the major tactics you may see, like stop hunts and all this stuff, fake breakouts. And after you are aware of all this stuff, of course you have to train it, so it will take some more time to develop the skills to read the market properly. But this may take the learning itself, let's say 3 months, to gather the screen time, depending, okay, it depends if you're trading full time or not. It may take a few hundreds of hours to really feel safe and to have the belief in your skills. But that is not the main part in trading. The main part, it is about you. For me, I think I could have made a lot of money many years back already, but I was not able to do it because emotionally I was not there. There have been feelings like greed, like fear, some like stress, like craziness. And that is much more difficult to handle, to cope with, because to change your behavior or to change your the way of thinking, the way you control your emotions, it is nothing that you can do in 30 minutes, also not in 30 days. Of course, everything starts with the very first small step, so the sooner you are starting, the earlier you are there. And usually I do not know any reason why not everyone should be able to overcome that, but you have to do it in a systematical way. You have to do it with continuous efforts. You have to overcome. For example, let's take why do we have fears in trading? One reason is, of course, we have some fear. We do not want to lose money. Especially, we do not want to lose money if this money was hard earned by doing hard work, and we know we do not want to afford, or we cannot afford to lose it. So every time the balance sheet, the terminal window is showing a red colored number with a minus in front of it, we are getting nervous because we are losing money, but we are doing this for making money, so there's something wrong. It's going in the wrong direction. So the fear, the stress level is increasing, and that is one reason for having fear. The other reason is based on our experiences. And most of us have blown up some accounts in the past, so from a certain moment on in time we are thinking, ooh, well, no, not again, it's going against me, the same situation like a few months back. And there's some kind of resignation involved as well. If you have done it several times, you lose the belief in you, in your skills, in your abilities, because somehow you start thinking about, oh no, I'm really a loser. So I'm doing that again and again, and with all my motivation, with all my efforts not to get there, I'm once again there. And yeah, it's not too surprising, because these memories, these experiences are stored in our memories, in our hard disk, in our head, and it's difficult. It's not easy to do a format to your hard disk to forget about all this, so you have to overwrite all this bad experience step by step. And something that is very well known is that it may take 10 times the time to erase bad experiences that it has taken to store them there. So we need to have several positive experience in a row, and that is sometimes and also a motivation for the beauty of the small numbers thingy. Go and close out your trading day even with 3 or 4 pips profit. It's a positive element, and enjoy this, celebrate this, make it big. Do not overemphasize the loss or the losses you may have had. Put your focus on the things that you are doing very well right now. And you see, it's always the same that we are working on. That's also the motivation for the 2 minutes that makes the difference. You know, the claim, focus on your success, push yourself, and that's exactly what you should do. So, but back to the question from James, sorry. More coffee, less coffee, not sure. What is the most difficult issue that you had to master in the past? Yeah, to overcome my bad experiences, to get into a kind of positive growing, because it takes time, and that is something that we do not want to invest into trading. Of course, we know we have to learn something because it's a new topic for us, but we do not want to spend too much time because we want to be rich tomorrow. And that is something that does not go together with trading. Maybe you have been lucky and you have been able to buy a very magic robot that is making you millions every day, but if you want to do it manually yourself, there's no way to be rich tomorrow. It will take time. Yeah, as with every other profession you may have had or you may have been dreaming of, it takes time. You cannot be an architect and building bridges without knowing your stuff. Of course you can do, but I promise you there will be some issues ahead for you. So yeah, let's have a look, because the hourly candle has closed. Let's jump back into the markets and let's pull the hourly chart. Weakness at the top, not too strong. We have not been that high as yesterday, so the market is open now. 2 minutes. Let's check the DAX, the German equity future. It was going up just after the opening, and then it was going down. You see we are above the 4-hour benchmark, so the orange colored line on my charts is the 4-hour benchmark, so the 4-hour trend. So we are above that. We are also above the daily pivot line. That is also true for euro dollar, the currency pair itself. And now let's have a look. Maybe there's a first valuable hint this morning. So, James, I will come back to you and your question. So, we have been going up. It's a 1 minute chart now. We have been breaking the round number with good momentum. See the size of the candles and compare the size of these upgoing candles with the sizes of the non-candles. Or do not know how to call it best. And from time to time I consider it as that is the force, that is the big food. So he is showing hand what he wanted to do. So he wanted to bring up the market And then he was hesitating for 15 minutes, something like that. Then a next attempt, and this high, it was not that high as yesterday. But the hint are these two candles. It was going above the round number again, so maybe they want to make us believe, yeah, break, stop hunt, typical stop hunt scenario, and then finally the break up here. But no, it was not the break up here. They have moved it down again below the round number again, and now we have to wait. But these two candles, let me erase my drawing. I'm talking about these two candles, that it was going up and down immediately. That could deliver some hint that we will not go too far above the round number, that this might have been already the beginning of the downturn. But who knows? As always, for me, the wicks of the 15-minute candle, and if I want to have some early indications of the 1-minute candles, the 5-minute candles, but the wicks. That is something that I pay attention to. They're easy to recognize, they're easy to spot, and they're talking a straight language. But that are the very first minutes after the European trading floors have been opened, so let's give it a little more time. Yeah, let's talk about an approach you may have or you may not have. It might be difficult because it's relatively early. You know, there's this daily fade off of the extremum. This 25 to 30 pips, regardless if this is an up day or a down day, if you have drawn a new daily high or daily low, usually during New York session there will be this fade off. So, for example, let's play a very simple idea together. Let's say for some reasons you believe it's going up. So of course you know there will be some hesitation, but it's going up. And regardless what Mr. Bernanke is doing or delivering, you are long. Let's suppose you are long. So you are trading this direction. So everything is fine for you. So it makes much more fun to think that you're short. So. And the market is going against you. The only thing you have to manage is that there will be this high and there will be this fade off of 25 to sometimes 50 pips. And the stronger the daily range is, the stronger is the fade off. If you have an 80 pip range, it will be roughly 25. If you would have a 200 pip range because of very strong action, it could be 50. So once again, it's all about risk and money management. If you are short and the market is going that way, you can count 95% of this fade off here. So the only thing you have to do, of course you can have some temporary rescues with these swings here, but keep your exposure in check so that you can make it back with a reasonable size with this very last 25 pips. But of course you have to be aware, depending on the time zone you're in, you may have to wait another 12 hours from now to get there. But that is something that makes me very relaxed in my trading. And you remember there have been days when the move was going 100 to 150 pips against me. I was never very nervous, and I was also not upset. When I'm in such a situation, I recognize relatively early during the trading day, okay, that will be not a day to make a large amount of pips. But I also know, okay, it will cost me several hours, much more than I wanted to invest, but I know that I will not be lost in the markets. There's a good chance to make it back, and maybe you are able to make your losses back with your short position on all these little retracements, so that you can finally make some money here with this down movement. there was this last ECB day when the market was going up very strong, 150 pips against me. So finally I made 2.2% on this day, and that was because I was able to keep my break even on my account relative close to break even on the up move. And so the last part of this down move, let's say in the last few pips before I scale off, and maybe you remember the situation, I really took my position out after exactly 50 pips. It was a strong day, so I was expecting 50, I was taking out at 50, and the market was not going much more. So why do I tell you all this? Yeah. Maybe it's based on James' question, because the major issue is fear, the emotions, and one way to get rid of your fears, if you have the strong belief, if this is happening against you with your short position, and you have the strong belief based on your experience that you can manage that you can handle that, and that you will not blow up your account, that you will not face a major loss, that you will not hit your daily drawdown limit, and maybe you're coming out of that with a profit on top. So why should you have some fears? And how to get there? With single steps like yesterday, small steps. Remember yesterday and the day before I was taking 6 pips and was happy to do that. Yeah, that's positive experience in a row. So this type of action is working on my hard disk, removing bad experience step by step. Okay, so what has happened during my lengthy explanations in the background? We are still close to the round number. Above of the round number we have more or less 5.5 minutes for this 15-minute candle. Let's have a look at the hourly. There is a wick at the top, not a very strong one. The next candle, yeah, I know it has to go another 50 minutes, but we have some wick at the bottom side. And look here at the 15-minute. The downturn was not a strong one. It is not a hint, I would say, for now. So let's see what's happening next. And helpful as most of the time. Woo! Sorry, friends. My chair is crashing. I should ponder about doing some more sports, I think. So, yeah, the 1 minute chart. There's some resistance there. And yeah, let's see if it is a reversal pattern, and if there's forming a downtrend then. So this is a lower high for now, so it could continue going down some more. And you know, a good target always is the moving average, the 4-hour benchmark. So yeah, let's see. The only thing we can do is waiting, and if you're in a position already, manage it. Trade these swings, scaling in, scaling out, depending on the direction you are in. Okay. So hopefully my chair is giving me some more time to sit on, at least for this show. I'm not sure what was happening exactly there. Yeah, it's it's a little bit unstable, but it seems to hold. So if I'm falling out of the picture, you know, My chair has broken down finally. Yeah, okay, but back to trading. Yeah, I have not checked especially for some option barriers. Of course, you know these round numbers, and if you have not been there for a few months, February, I was telling you, there are of course some option barriers of interest, and you know about the New York cut, so maybe it's a good idea to check for option barriers so we have an idea about magnetic levels. Could be 134.50 or 133.50. I know from yesterday's option barriers, of course, there have been a lot at 133.50 and 133.25. But I have no idea about today. But okay, let's go back into the Mailbag. Yeah, from your experience, the most difficult issue that you had to master in the past. Yeah, overcoming my fears to get emotional stable. That was difficult. And you see from my shows, there are a lot of little steps I'm still doing, and I think I will continue as long as I'm trading the markets. It's the little meditation, it's taking small profits, it's trying to avoid losses. There is no need that you have to have a drawdown, a big swing against you of 5 or 10 or 20% in your trading every day before you are able to make it back and to earn 1% then. This relation is not a very positive one. If you have to face drawdowns of 5 or 10% to finally make 1 or 2% profit, that's not a good one. So if you're going to make 1 or 2% profit, the drawdown, of course we are trading swings and we are scaling in, we are optimizing our entry. So very different to other trading approaches or trading styles, we have drawdowns. And yeah, it's not that we have to consider it as something very bad, but for making 1 or 2%, the drawdown should not extend 5%. But okay, that's up to you, to your numbers, but think about that. If you have too many losing days in a row, and that could be possible, it takes too long to make it back before the next series of losing days may start. I'm still checking the 1 minute, so now we are here at this support level and we are closer to this number, so yeah, the 50-minute candle has closed, so yeah, it was some kind of stop hunt for now. So are we able to break the moving average significantly, or can we expect the next swing up? I do not know. Because of that, I'm going to the next question. It's from Dana. How important is the broker in this FX trading game? Can he turn a profitable strategy into a losing one? That's a brilliant question, I would say. Thanks, Dana, for this question. It's not too easy to answer. It depends on your trading style. If you prefer to be a scalper, that means you're going for 1, 2, 3, 4 pips and you're staying in a trade only a few seconds. So your trading is based on short-term momentum. Of course, the broker can turn your scalping approach into a losing strategy. Yeah, for 2 reasons at least. If the spread is not reasonable for this way of trading, that means everything that is, let's relate to euro dollar, that is around 1.5, or at least everything that is bigger than 1 pip makes it really more difficult and decreases your return significantly and may turn your strategy into a losing strategy, and that might be also the difference between trying it on demo and trying it on real money. Because this spread may be different, and there's something else. On the demo account you will never have a slippage, because there is no need to match your trades maybe in-house with the virtual dealer plugin the broker may have. There is no need to slip you, to fade you, to front run you or whatever, because it's not real money, so you will have an immediate execution all the time. On a real money account that is different, because there might be some broker interests that are going against your interests. They want to make money, and they have the slightly stronger position than you. So what you usually face is, maybe if you have a nominal spread of 0.6, there are a lot of brokers offering a spread below 1 on euro dollar, and woo! Next attempt. So this could be very helpful. If this is not going up some more, then you are witnessing a stop hunt in the making, and this is why I love to have my tick chart. Have a look here. So on the 1 minute or on the 5 minute it's just a large candle, but this, they have thrown in a lot of power there to make this happening. And if this is going to reverse, then you know they are trapping. Well, let me draw that for you. They are trapping some volume here. Here in this area. And they will do and continue doing that till they have enough to finally break it down. So trapping volume here, they want us to go in long, so they are short, so they need finally this down move here. And this here, this is a strong sign for that. And there's another strong sign here on the 1 minute. Have a look at this wick. Compare these levels here. Oh, sorry. Yeah. And have a look at this wick. And once again pull up this. That have been the candles of power. There's some force, and that is what they want to do. This is, let's say, this is a standard market, smaller candles drifting around, and that is market making manipulation. So let's see. And remember, there are no major news scheduled for this morning. Of course, there could be something that is not on schedule. One of the big heads can move the market easily, much easier than the market makers. But the probability is not too high. Maybe immediately after Mr. Bernanke was on, there is some chance that Mr. Draghi is showing up, depending on what the market is doing, because on the Eurozone, of course, has also its intentions about the relation between euro and dollar. Yeah, but what you can see, I'm not really in trading mode this morning. Sorry for that. Usually I would have jumped in short on such a move to give it a try, but my trading mindset, my trader's mindset is not there. Yeah, back to the questions. Yeah, that was about scalping, slippage and spread. In all other cases, yeah, Dana was asking about the strategy. Of course, a broker can turn your account into a non-existing account if he's going bankrupt. So you have to put some care in choosing your broker. He should be reliable. He should have implemented some insurances for your capital. Yeah, at least if your account is growing. Maybe it's not so interesting if the broker is going bust and you have a $300 account for you. It's painful. You do not want to lose this money. And if you want to lose this money may be by your trading, but not because the broker went bankrupt. But it's a very different game if you have 30, 50, $100 in that account. So you have to pay attention to the regulation of the broker, the balance sheet of the broker. Maybe you can get the balance sheet of the company to have an idea if they're doing well or not. Have a talk to the guys. You know, they are perfect salesmen. They can sell you snake oil for sure, but with some experience you get an idea how they try to cheat you, what they really want to make you believe, and what could be the reality behind. There's a very simple, for example, simple way to state if the broker is doing well. Let's pull up some history last 3 days, let's say. So at the very first you have the order number, and this order number is a continuous number reflecting all the orders that have been put with the broker. So you want to see a good increase in these numbers to see how many to see that the number of traders may be growing, at least that the trading volume is growing. So if you have a broker that is showing consecutive numbers with your trades, and let's say you're taking a trade every 5 minutes and you have consecutive numbers, it's a clear sign that there are not many people trading, at least not at that time of the day, and that there are not too many other clients on there with a funded live account. So that it could be an indication, and that is something you should ask your salesman. Why are so few trades only? And it depends on how long he needs to give you an answer, and if he is surprised by this, you can read a lot out of it. So that is not about that a broker can turn your strategy into a losing strategy, but that is a way or a danger, a risk, how the broker may kill your account. With all other ways of trading that is not based on scalping, that is not based on very, very short-term momentum. So let's see, are we going to break down? I see it as 2 strong stop hunt attempts here. The same we have seen yesterday to the other side. You remember the 3 candles at the bottom side with this nice looking wicks? If you don't, I will show you. And now it's exactly on the top side, so there might be some tendency to go down some more. So we have been talking about what we have been waiting for here before this candles with this wicks here. That's what we have been talking about yesterday and waiting for. And now we have it on the other side, on the top side. It's not a prediction, or it's not an advice that you should go short in any case. But for now it looks, especially because we have been very close to yesterday's high, like they have been trapping some more volume here, and maybe this is the direction for the next hour. Yeah, friends, no trade from my side, and I'm not in trading mood. So, third attempt to finish the answer to this question from Dana. All other ways of trading, the broker and the spread, the slippage is not too important. Of course, if he is slipping you with every entry by 1 or 2 pips, that is money that you have not made, and that should be in your pocket because you have chosen the entries very well or well timed, and he is stealing you 1 or 2 pips with the slippage. But if your strategy is turning into a losing one because of a slippage of 1 or 2 pips, then you should think about your strategy. Then the edge you may have is not that big, and the trading style, the technique, the system you have may not work during all phases of the market. So finally, my statement is, if you're not a scalper, the broker usually cannot turn a winning strategy into a losing one. The same is true what we are doing here. Of course, it looks, Ray was asking, why are you trying to rescue a position inside of 4 or 5 pips? If you have a slippage of 2 pips inside of this 5 pips, of course, that is decreasing my profits, that is decreasing the numbers of returns to break even I will have, but it is not turning this strategy into a losing one. It will still make money. So I would focus to have a reasonable, reliable broker with reasonable spreads. Then I would forget about the broker. Of course, if you feel strange somehow with some trades you will receive and some fillings you get, you should pay more attention to it. But I would focus on your way of trading, to gather some more experience, to get stable in your mindset, to develop your tactics, your system a little further. And when your system is running very stable, then I would pay time and efforts into choosing, selecting, testing different brokers. Okay, guys, James, Diana, thanks again for your questions. Very interesting ones, and I hope I was able to answer them in a way that is useful for you. If not, please let me know, send me a follow-up of your email, or try to contact me on Skype or in the live chat window. There are many ways to get in contact with me. Okay, that's it. That was the little mailbag for today. Once again, we have to pay attention to the wick, especially because in the last 30 seconds of this 15-minute candle is running. We are approaching the low of the Asian session so far, and if there's a close to the candle's low, there could be some more down momentum, maybe a piercing of the daily pivot line. Who knows? Let's have a look at the 15-minute chart. So the little longer lasting 15-minute chart. Let's try to identify potential support levels. And you know, I do not have any magic trick for that. I consider a possible support level is the area where the price has turned in the very recent past. So I look back usually to yesterday's trading level. So we have some potential areas. Of course, the 50 level itself. Of course, the early yesterday low we have seen. So there are many levels on the way down. So that is cool if you're long and you have to rescue something. If you know there are several levels and you know there's no big news in the next 1 or 2 hours, every level is a potential rescue opportunity to scale in a rescue into your long position and to make it back with every little retracement. So that's why I love to have a lot of support levels on the way down in case it is going against me. So this candle has closed, and yes, I think we will see at least a piercing down. There should be a few more pips, and have a look at the equity market. For some reason, let me check the news, the stock market is going down. It has lost roughly 90, it was close to 100 points on this move down here from the high to this low. I do not know the reason. Maybe the people are taking profit because during the last few days the stock market was going up as well, and if Mr. Bernanke is reducing QE, there is not that much buying power left, so that the stock market may climb up some more. At least the speed it is going to slow down or maybe turn. Yeah, let's check the hourly chart, how the pattern is looking there. Oops. Yeah, okay, this recent candle has the potential to reverse the upgoing one, so this resistance level together with this wick, for now it's playing according to the rules. And for some reason, for me, it is easier to spot a reversal at the bottom side that is turning into an up move than usually it is more difficult to spot this as a reversal and a stop hunt high. I love to spot stop hunt lows to go up then, but I think it's a very common behavior because we love things that are going up. If you're thinking about growth and you're looking at charts or diagrams showing growth, the curve has to go up, and so being short is not a very natural way of seeing things, because being short, our account will grow when things are going down, so it's not what we are used to see. So maybe that's the reason why most traders, even if you're trading currencies and you know it's not about going up and down, it's about a strength in a single currency, we tend to be long the pair. Most of the traders are long the pair. I do not say that the volume finally traded that way is more or less, or having an overweight being long the pair, but the number of trades, most of the time there's an overweight of being long in the pair. So we love to see some things going up. So let's pay attention to the DAX. So maybe this was low, so we have to be careful. This stop hunt, this little move down, this few pips, of course it was a downswing. We are below the moving average, we are below the round number, but it's all about sentiment, especially if we are approaching an event or from Mr. Bernanke like today. It's especially about sentiment. So, and the sentiment indication is in the stock markets. They are able to express the fears, the doubts more clear than the equity markets and than the currency markets. So to make it clear, the equity, the stock market is expressing the fears and doubts and maybe panic more clear than the currency markets. Check the DAX. It was a strong candle down, but let's zoom a little. It's a 5-minute chart. The DAX is shown on a 5-minute chart, so it's similar to what we see here. And yeah, you see the DAX was making this the highs with the same timing we have seen here in high. It was not that pronounced as on the currencies. These are both 5-minute charts, but this was the high pre-London relating to this. Then there was a little second attempt going up on the currency. It was more pronounced, getting very close to the earlier high. Here was a little more room, but the move down here, it's the same. Then the little reversal, it's the same. This white candle here, the wick here is represented by the white candle here. So this markets, these instruments are in sync at the moment. So, and I think the market, the stock market, is leading. Not always, very often, but at least at the moment it is leading the currency pairs. Yeah, beside all the explanations and the questions you have sent me in the market, we have seen some action, but come on. We are trading a range of 10 pips above the round number and 13 pips, 23 pips roughly, since we have started our live show here, so there is some action, and the background sound, the tick noise I am having on, sometimes makes us believe there's some good action, but 23 pips only. There's some chance, at least for euro dollar, that we will see some kind of range trading, maybe relatively close to the 134 number, till Mr. Bernanke is coming up. Yeah, friends, if you are still awake and have not fallen asleep, any questions, anything you want to know? Maybe the brand of my coffee. DAX is still creeping up a little. Once again, 5 minutes left for the 15-minute candle. Let's see. Yeah, it's something that Ray was asking yesterday. The splitting up of rescue levels. Let's say you're going in with the second level, having 3 times the size of the scout, and you split it up into 3 single scout-sized troops. Of course, there is a limitation with that. If you're defending your position, let's imagine you're on the wrong side of the move and you're going in always with single scout-sized levels. There is a chance that during your trading session you are not able to get back to break even at all, because you're keeping the break even price following the move against you, but maybe it's always too far off. Maybe it's always 25 or 40 pips away. So with this little smooth going in and very defensive going in, it will find an end if there was a move. And also on my side here, for example, if the move is going 100 pips or 150 pips against me, my final rescue levels are not micro lots anymore. So scout sized, they are stronger. They are 3 micro lots, 5 micro lots, so 3 times scout, 5 times scout, 10 times scout. But usually, because we are in a ranging market situation for a long time now, usually this 11111 thingy plays out very well. But there, especially at ECB days or the Bernanke days or non-farm payroll days, and if you're on the wrong side, finally, this 11111 thingy may not bring you back to break even finally. So you need to, there are 2 attempts for a solution. Maybe you have to stay 2 days with your trades and have a night shift then, or you have to become more aggressive at the end of the day, and especially become more aggressive when you can be relatively sure that you are going to see this daily fade off from the extremum, this 25 pips I'm mentioning so often. So if there is a good proof, if there are good signs that we have passed by the New York high or the New York low, then I usually tend to scale in stronger to reduce the distance to break even, though that break even should be inside of this expected 25 pips. Yeah, friends, anything you want to know? I will not have a New York session or a live event with Mr. Bernanke. My schedule is not really sure at the moment. So yeah, I think I will be trading sometime in the afternoon, and I try to trade around Mr. Bernanke, but I cannot be sure, and so I'm not promising anything. But I will give you a detailed review of all this tomorrow morning then. And tomorrow morning we will have another London opening session. So the last 30 seconds, let's see. Seems we have been going back to the round number before we turned down, and once again the last 1 and 2 minutes showing the fourth in the market. So with this candle closing that way, I would expect to see a retest of the Asian low and at least a piercing a little more down. So this candle has closed, so let's see. I would not bet my house on it. We are talking about probabilities all the time, and the you know, FTA was mentioning pay attention to the evolving patterns. So this implicitly means do not pay too much attention to the already closed candle patterns, but pay attention what's going on in the market just right now, not 10 minutes back, not an hour back. So everything can change every minute, so a probability of 41% going long may change immediately into 51% going short then. So, and we have to pay attention to that, and we have to adapt our sizes, our direction. Well, not necessarily the direction of our trade, but the exposure, the number of troops we have in the market. So having this candle here on the 5 minute, let's have a look here at the 1 minute, it's more clear there. There's a chance to go down some more, retest the low or pierce down a little. It's still typical Bigfoot pattern there. Yeah, friends, if you don't mind, and if there are no more questions out there, I'm going to close out early because I have an appointment in roughly 1 hour from now, so I can take a little more time for the preparation of this event. Yeah, please, if there are some more questions, let me know now. I will give you some time to ponder about that. No more session today, but tomorrow morning I think I will go into details of Mr. Bernanke's action and the market's action, and maybe of my catastrophic trades I may have taken. One of the few sessions without any trade so far. Whatever you're doing during your trading day, if we are getting closer to the event, try to scale down your exposure. Do not go fully fledged into this event, it can kill you. Not you, and hopefully not your account, but it could break your daily drawdown limit in a blink. We can expect volatility that means up and down in maybe inside of a minute of 50-60 pips. It's not untypical. Ray is asking if the last turn of the New York day, no, is the last turn of the New York day in the last hour. You never know. Sometimes it is when after the London boys have been have closed out their positions, and that is usually in 7 hours and 10 minutes from now. Sometimes it depends on what is going on the stock market. So then it is in the last hour of the New York day. So the Wall Street is closing out at 8 p.m. GMT. So, but there is the futures market is still open then for 1 more hour, so you never know. Usually it is in the second half of the New York trading day. That means it's rarely, I do not know any single situation that it was before New York lunchtime. So it's somewhere in the afternoon. There are no detailed or specific times. That would be too predictive, I think. Yeah, it would be too easy then. So we have to spot for that. But have a look, for example, yesterday. Yeah, I need to have 50-minute chart with my session timing on. So, oops. Let me bring this one up here. So let's zoom in. It's a 50-minute chart, and let's focus on yesterday's action. The purple colored rectangle Asian session, the green colored rectangle London session, the red colored rectangle New York session. So what you have seen is there was some news, not too important usually, but with having Mr. Bernanke today, it was a volatile action there. And yeah, you have seen, you see it, an early New York low. I would consider not that at an early New York high, because it was the volatility out of the news, but that was the low. And then you have seen the high here, and it was, you see here, this level, this barrier, this is the closeout of the London session. So it was 1 hour before the London close, and then it was drifting down. Typical scenario, you never see the same highs again. They have been trapping some more volume here, what they usually do, and then they have faded down the move into the Asian range, and it will be roughly 25 pips, 30 pips, not sure. So you never can be sure about that. Let's have a look at the action just right now. Here we are. So what I was expecting, at least a test of the low and maybe a piercing down. I do not know. Yeah, I'm not just looking for the high of the day, I'm looking for the high of the session. So you have usually you have a London low or high, and if you have a London low or a London high for the day, then you can have a little prediction that the New York extremum will be. If there was a London high of the day, then usually you have a New York low first and having another New York high later on. So yeah, I'm looking for the high and the low of the day, respectively the session, especially the New York session. Yeah, it's in fact I know that is really late for you, so sorry. There are disadvantages and advantages depending on the region you're staying in regards to trading. And yeah, I know it's already I think it's really late for you, Ray, then to wait till the end of the New York session. But for example, if it is close to the New York end like yesterday, yeah, maybe it is midnight at your time then, or 1 in the morning, do not know exactly. Yeah, okay friends, I'm closing out this session. Thanks for joining in again. Please stay nimble. Please do not go with a big exposure into Mr. Bernanke. And if you want to have some fun with Mr. Bernanke, do it with a scout. try to do some scalping, try to predict the volatility, or try to approach the volatility with some limited orders, so that you are jumping in at a predefined price when the volatility is going down. Scalping 10 pips with a predefined profit, take profit and leave it that way. Train on that so you can develop a second tactic, trading the news events like that. Then, yeah, bye friends, bye Ray, bonjour, Rashid, Mark. Wish you a great day and stay nimble. See you tomorrow morning again. Bye bye friends.